Hi, my name's David Paul. I'm the Managing Director of VectorVest in the UK. I think we all knew it was going to happen. When markets get this bullish, then invariably something comes out of the woodwork to cause some selling. And that certainly happened with this Chinese situation. I'm looking at, in the first slide, the VectorVest composite of the US market. That's all 8,000 odd shares that we follow in the American markets. They're equally weighted. And I think you can see very clearly the high momentum move that occurred from October last year. I've drawn a trend line along the tops, which sort of shows the breakout of that inverted head and shoulders reversal that's been in place for the last 18 months. The lower trend line goes right back to the 2009 lows. So I wouldn't be at all surprised to see a pullback that comes back to kiss that breakout where that resistance becomes support. But certainly it was no surprise. So in the next slide, I've blown that up in a daily chart. Now down below the price chart, we've got our market timing indicator, which is a momentum indicator of both the price of the VectorVest Composite USA and the breadth of it, the number of shares on a buy divided by the number of shares on a sell. And as you can see, there's very clear and marked bearish normal divergence, which is a leading indicator of change. As I say, if the Chinese virus had not come out of the woodwork, something else would have come out of the woodwork to have caused that selling. Markets a little oversold on the daily basis. I wouldn't be at all surprised to see a bounce today. I think you're going to have to be quite clever if you look for a shorting opportunity without the luxury of a big stop loss. So I wouldn't be at all surprised to see a bounce today. And then I think probably we've got a weekly high in place, and we're going to see more downside towards those old tops that I marked in the previous slide. But there is opportunity. And in the next slide, there's certainly opportunity in the gold market. This is the GDX. I'm holding the GDX, and certainly I've been talking about that to VectorVest customers for a long time now. Pulled back after a nice move up the page in a textbook falling wedge, broken out of that, and pulled back again, charted what chartists refer to as a morning star weekly candle, very powerful weekly candle. And I think that there's upside in the GDX and in gold until about March 2020. So another 2-3 months of a run there. Next slide shows Barrick. I'm holding Barrick. Again, it's pulled out of that falling wedge. Again, charted a very positive weekly morning star candle pattern. Again, I think upside in Barrick to March 2020 at least. That vertical line would represent the target. Add that to the low, and that should work out a target, what technicians refer to as a measured move. And in the next slide, we've got silver. Now, this is a very aggressive exchange-traded fund in silver, AGQ, and it's double leveraged. So for those of you that have got the stomach to trade something which has got double leverage on a commodity share, this looks exceptionally strong. Push after a double bottom, a textbook 5-wave flag pattern, and it's broken out of that flag. Again, I think that the high probability move here in AGQ. So silver looks wonderful, whether you're leveraged or whether you're just buying a silver stock. And in the last slide, oil. Oil is coming off, folks. I think there's more downside in oil. I think that downside can easily last another 2 to 3 weeks. And I can see crude getting down to somewhere around $45 to $48. I think there's going to be great opportunities in oil when that happens. I hope this helps. Thank you.